Welcome to FounderLine, the show where we answer your questions about startups. I'm your host, Joe Beninato. Thanks for joining us. It's great to have you all with us. Our goal with FounderLine is to provide a forum where startup founders and employees can get their questions about startups answered. Maybe you're thinking about starting a company, maybe you're a startup founder and you have some questions about a situation that's going on at your company. Maybe you're an employee who's thinking about joining a startup. And in any of those cases, if you have a question, we'd like to try and help you out. This is a live show, so you can reach out to us multiple ways. You can call us toll free. The number is 1-844-4FOUNDER. That's 1-844-436-8633. You can email us. The email address is help@founderline.com. And you can also tweet at us. The Twitter handle is @FounderLine. With that, let's get started. Our guest today is John Lilly, who's a partner at Greylock Partners. John's been an entrepreneur and an investor in many different companies. He's worked at Apple, Trilogy, and Reactivity, a company he founded. He's also been an investor in some great companies, Dropbox, Tumblr, and Instagram, as well as many others. John, welcome. Thanks for joining us today.
Thanks, Joe. I've never heard of an 844 number before, like moving down in the toll-free number.
Well, you know, when you want to get a vanity number, you got to
dig deep.
Yeah, exactly.
Yeah, good work.
So it turns out there are actually people who will rent you out numbers and then over time raise the prices on you. So yeah, very, very interesting
Smart.
things. You know, as in a startup, you got to find these things out.
It's probably two Y Combinator companies doing that right now.
Exactly, and they'll be at demo day shortly. So usually when we start out, I like to ask a few questions just to let people get to know you a little bit better.
Sure.
and talk about some hopefully interesting topics. So you and I have known each other a long time now. You've been working in startups for almost 20 years now, right?
Probably more than 20 years.
Yeah. So yeah, we're old. And I think one of the things that's been really interesting is how the funding and creation of startups has really evolved, especially in the last, say, 5 to 7 years.
Sure.
Think back to your days at Reactivity and like what you went through there, as well as what's going on now. So walk us through, what you've seen and the changes you've seen as you've been working in startups.
Sure. I think it's hard to remember now, but I think it was pretty hard to figure out just what to do when you were getting funded before. Like, I don't know exactly how it was for you when you did when Reactivity. I remember our first meeting with a VC, and VCs were kind of this like mysterious thing, and we went in and we had no idea what to expect, and we met, it turned out to be Ann Winblad at Humber Winblad, was the first VC I ever really met. And we just had no idea how to approach it, no idea how to talk to her. And we couldn't really even figure, we were so young and kind of dumb, but we didn't even know how to ask anybody about how to talk to her.
Yeah.
And we lucked out, and we ended up taking an investment from a guy named Peter Fenton, who was an associate at Excel at the time, and the partner there was a guy named Mitch Kapor. But the reason we knew Peter is because we knew him from school. And it's just was so hard to get access and so hard to understand back in 1997, 1998. Now, I think you walk outside, you fall over an angel investor or a micro VC or venture capitalist on Twitter, and I think the access is much clearer. I think the sense of how to approach it, how to talk to people is much clearer.
Lots more resources online for people to read about it and hear stories about it, right?
Yeah, for sure. So I think a lot of that's changed. I think, and of course, the other thing that's changed is that the capital requirements have been completely different. Every time we started a lot of companies out of Reactivity, but you have to go we actually had a server room in our shitty little office, right? Yeah. And wow, I already swore. It took me 2 minutes.
We'll charge you later. Don't worry.
It's I knew it would happen. I didn't think the first 2 minutes. Anyway, so but we had server rooms and servers and racks, and of course now AWS, you can get started and get in distribution, right away. So I think everything's changed, which is why you're seeing this explosion of creativity now.
No, and it's awesome, right? It's just
it is.
I think
it's good for everyone. Really.
Of startups. So that's great. So as I was doing a little homework on this, the two that stood out for me were some recent exits, Tumblr and Instagram. And I think what's interesting is everybody knows about these companies and maybe was a user or had heard about them, but getting access to them and being able to convince them to take money from you is a different story, right?
Yeah.
And so I don't want you to give away any of your like VC secrets, that you don't want your competitors to know. But walk us through the process of identifying those companies that you want to spend more time with, and then ultimately getting the investment from them.
Yeah. Well, I mean, Tumblr is a fun one. We invested in that in the first year, my first year as a VC, which was 2011. And that came in through my partner David, David Z, my partner who invested in LinkedIn, Facebook, Pandora.
Yeah.
He's been very, very successful VC. And one of the special things about Greylock is that David had known Bijan Sabet, who's an amazing and great investor as well. He had known him on the way and just said, hey, whenever Tumblr raises, give me a shout. And then David, got me involved. We flew to New York. We spent a lot of time with David Karp.
And the two of you?
Yeah, David Z and I did together. I think some firms, the senior partner goes and tries to tries to get the interesting deal. I think David was always very, very supportive and really worked hard to make sure that I had the chance to interact with David Karp, the founder of Tumblr, and John Maloney, the CEO, the president. And mostly we liked the product, we used it, and we went and we talked to Tumblr about it. We said, oh, have you thought about this? Have you thought about this? Tell us what you're doing next. And I think the first day we spent probably 2 or 3 hours just talking about product. I don't think we talked about the investment or the funding at all. And so we spent 2 or 3 hours with David. I went back to New York a few weeks later just to see him again and talk him through product and talk him through what they were planning to do with the business. And for me, that's the fun thing to do, because I was involved in startups for 20 years before I became an investor. I just like talking about product, how you're building the business, how you're staffing, how you're attracting the best possible people for every role, what the challenges are, and we just did that a lot with David and John for over the course of 3 or 4 meetings. And then we were aggressive. We ended up investing in Tumblr without bringing them into the partnership, which, and I found out in retrospect, it was our largest check we'd ever written into a company for the first round.
Wow. Because it was competitive and there was a clock, or what was the...
Yeah, I think so. It was a competitive deal. We were interested in being involved, and we did what we could to do it. And so it was scarier in retrospect, and it should have been scarier than I felt. I felt a little scarier, but once he told me it was the biggest check we'd ever written for the first round,
yeah,
it became a little scarier.
No pressure at all.
But anyway, that was I felt very lucky to be involved in that company, and obviously they're doing very, very well at Yahoo now.
Yeah.
Instagram's different. Instagram, I came to from a product standpoint, and I just started using the product. And my aha there was I was having lunch with a photographer friend of mine, a guy named Eric Chang, who's now he runs photography at DJI. They make those Phantom drones.
Okay.
And so Eric's claim to fame is that among his many claims to fame, is that he was one of the first underwater digital photographers. So he's a semi-pro photographer, amazing equipment. And what I noticed is that he started posting his pictures to Instagram using these filters that would blow out the contrast or make them lower fidelity. And I'm like, Eric, what are you doing? You have these beautiful pictures. Why are you an amazing photographer using Instagram?
Yeah.
And he's like, well, I use it because of distribution. I use it because it's an easy and powerful way to send what I take to lots and lots of people. And that was the first time I really noticed and started paying attention to what's happening with Instagram as a distribution mechanism, as opposed to just like a faux retro filter company, Yep. And so then we called up Kevin, and we started chasing Kevin, and there were 6 or 7 people at the time. He's trying to figure out what the hell he would do with financing. He's like, he would raise $6 or $7 million from Benchmark. He had 6 or 7 million users. They were growing like crazy. He's like, what do I need more people for? Because everything's going great. And so we chased him for 6 months, and eventually it worked out. And mostly the conversations we had were, well, let's help you think through what comes next. Let's help you think through how you hire, how you build an organization, how you build an organization, not just a product, and how you build something that's really durable. And that sounds kind of ridiculous, because we eventually wrote the check. We wired the money on a Thursday, and he called me the next Sunday, to tell me they were getting acquired by Facebook. So it was a 4-day turn for us, which was unusual. So it's not exactly a built to last, but Kevin was so special, and he really had durability in his mind. He wanted to build a big, robust company. And so that was all the conversations we had over that 6 months. But it really took us probably 6 months to get to a place where he was ready to get funded.
That's an awesome story. We'll have to get him on here sometime and
Kevin's
hear from the
guy.
other side of the the aisle and see what he says. Well, that's great. The other thing I thought would be interesting is I know you're on the board for Code for America,
Sure.
and I think it's a really great nonprofit, and love to hear more about why you got involved in that and what they're up to and where they're heading.
Yeah, well, I mean, you know this. I believe in mixing for-profit work and nonprofit work. My work in Mozilla, which was a nonprofit for a long time.
Sure.
I rolled off the board of that earlier this year, but a couple years ago, Jennifer Palka, the founder of Code for America, asked me to get involved, and her basic thesis. She started the organization 4 or 5 years ago. It's a nonprofit, but her basic belief is that government in the 21st century can work. A government of the people and for the people, but that we have to figure out how to build engagement, how to get people involved, how to get technology built, and how to kind of match the technology and engagement of consumer technology to the government.
Yep.
And I believe really strongly in that. That shows up as they have fellows that show up every year. They're designers and back-end technologists and front-end technologists. They go into the cities that are partners of Code for America. They help them build engagement tools and more technology to get to social outcomes. And then they have brigades and an accelerator, and it's really blossomed over the years into something pretty special.
Awesome. Well, why don't we see if we can take some questions and help people out. Once again, if you want to reach us, call us. The number's 1-844-4FOUNDER. Email us help@founderline.com or tweet to @founderline. So let me see what's been coming in here. Oh, we got a call on hold. So let me go over that. And it's Hong. So we have Hong on the line. Same thing.
Yeah. So yes, end consumers could be like Tesla or other electric vehicle manufacturers.
Yeah.
But the technology can also scale down to smaller vehicles.
Yeah, for that stuff, I think you probably just need to go find those companies and talk to them directly. I think it's hard to really imagine what their problems are, and I think that there's no substitute for going and talking to people directly about what their problems are. But that's going to be great. Greylock, we're mostly a software investor. We're really entirely a software investor. So batteries are probably not really our thing, but the world needs better batteries for sure. So it'd be good to get your company out in the market as quick as you can.
Awesome. Thanks, Hong. Great question. Let's go to, let's see, we got an email. So this is from Eric. How many startup pitches do you receive every day, and how many of those do you respond to? So this is always tough, right? I mean, you guys get bombarded with all sorts of stuff, and I know you try to get back to as many as you can, but give us some orders of magnitude.
I don't know. So I mean, I think I probably take about between 300 and 400 meetings with new companies a year. So, and and I've probably done 2 or 3 full-on. Elisa Schreiber joined us in January as our VP of Marketing, Vice President of Marketing, and she used to run marketing at Hulu, so a consumer company down in Los Angeles.
Yeah.
And for Elisa, what she's doing is trying to help us tell our stories a little bit at Greylock about the kinds of companies that we invest in and why. But she also helps and interacts with virtually every startup we invest in when they need help. I think most startups, as you get ramped and running, you develop your own ability to tell your story, and it's that's the job of the CEO and the job of the company is to tell your story again and again. But Elisa can help help with guidance or an introduction at the right time, and she's been super valuable to a few of the companies that I've been involved with. So I think it's still evolving. There's a lot of heavy. If you look at our website, you can tell there's a lot of heavy lift just marketing Greylock at the moment, and fixing some of our work. But but she helps our startups all the time.
All right. So next we have a call. This is one of our regulars, Larry from Yuba City. So I don't know if Larry's ever called before. Larry, are you with us?
I am. Joe, can you hear me okay?
Yeah, welcome. Nice to hear your voice.
Thanks. Oh, well, thanks for doing a great job. A great job with this show. You have great guests. I'm sure that there are many startups that are so busy they can't actually catch your show live, so we're fortunate that we can usually take some time away to do that.
Yeah.
I had a question for John.
Okay.
And I was wondering, when you look at a company, how do you rank the importance of the problem or opportunity that the startup is solving relative to the relationship that you might have with the founder or with what one of your partners might have with the founder relative to the team that they've assembled to solve the problem?
Right. So how do we look at the problem that you're solving versus the relationship with the founders? I would say there are different types of investments you make. Sometimes there are people who are just so obviously unbelievable and smart. You say, here's an investment, go crazy. Like, do what you will and be good.
Solely based on the person, not
the person and their background. And in particular for us, what we've noticed is that when there are certain founders who come back, who kind of tilt at the same problem multiple times in their career. You look at somebody like Ev Williams, who's been around publishing 3 times now, Blogger, Twitter, and now Medium. Easy for us to get excited about backing him.
Yeah.
You know, guys like Jason Kylar doing Vessel now after he did Hulu. So there's sometimes when you just say, look, that person is so obviously talented, so obviously motivated, we just want to be in business and we just want to help. There are other times when you, and then you sort of trust that their instincts will steer them to important problems in big markets.
Yep.
Then there are other times you look at the problem and say, man, this is a brutal problem to solve. If we could solve this problem, things could be good. I would say that for us specifically, we think less about the problem and more about the product. Like how you answer what the problem is matters. I mean, more than just saying, well, you know, I've looked at analyst reports and there's this big gap in the market, and here's what McKinsey says, and here's what Deloitte says. And so for us, it's having a sense of what the world should look like, not just a sense of how the world is broken, and not just a sense of the opportunity. So, you know, I think what you find for us is that, you know, 10 or 15 minutes into any presentation, we say, whether it's consumer or enterprise, we say, hey, can we just see the product? Let's talk about it. And then hearing people talk about the product and what they've built and how they're building it, and gives insight into how they think about it, how they empathize with their users and their customers, and how they think about the big market space. So, you know, I would say it's always a combination of things. You want people working on big problems, but you also want them kind of seeing how they're going to take steps to go from here, where you're kind of just starting, here to here to here to here, and tack, so you can actually attack the big thing and get the big change you want. But you know, it's a mix of things, honestly. You did say find a relationship with a founder, but then you said in the team they've assembled. I will say, you know, the team you're able to assemble, that's huge. Recruiting is one of the main jobs of a CEO.
Yep.
And the ability to get unnaturally talented people who really shouldn't take jobs at that level, to join you, that's huge.
Yeah.
And being able to get people to follow you, that's a huge signal.
Yep. All right, awesome. Thanks, Larry. Great question. Let's do one more here before we go to the sponsor stuff. This one is an email from Marty. I am looking for a technical co-founder for my startup. What's the best way to find one? So again, related to recruiting, right?
Yeah.
And building a team. So
yeah,
that's a tough one.
Yeah, co-founders are tricky. You know, I was very lucky when I started my company that I started with 2 guys that I'd worked with and known for a long time, 3 guys really, that I'd known for a long time. And it was just an emergent process for us where the time kind of came, we all quit our jobs and started a company. And I don't know if it was like that for you.
Sometimes like that, other times, you know, out trying to find.
Oh, right, you've done a few things.
Yeah,
I forgot.
yeah.
You've done this a number of times.
Yeah.
I would say it's just hard. I think that the main thing is you got to kiss a lot of frogs. I think that as much as anything, it's how you fit together and your chemistry. I think that it's an affinity for a problem. Like maybe you're super psyched about Bitcoin, or super psyched about crypto, or super psyched about solving problems in healthcare.
Yep.
And I think, you know, you just got to show up and talk to people, and just not get discouraged. You know, spend a lot of time at meetups, spend a lot of time blogging, you know, and then I think spend a lot of time reading. So I think if you see people blogging and tweeting about stuff you're interested in, reach out. But cold calling for other founders, a lot of times you say, hey, I saw this thing you wrote. I know you work at Twitter or Facebook or LinkedIn now, but I saw this thing you wrote and it really spoke to me. Would you be up for a cup of coffee? That'd be a huge thing too.
Yeah.
But it takes some time. You have to be patient.
Well, and I think a lot of people are a little shy about that sort of thing, and would never think to like reach out to some person and say, hey, do you want to get together for that? But you can find some amazing people, and what I found over the years is it may not be right for them at that moment in time, but maybe somewhere down the road there's
sure.
a different opportunity, right? So I think that's a big deal. But Marty, I think it's a hard problem to just have a business idea, and certainly it's unlikely you'd get it funded at that point. Until you have a technical co-founder and you've actually even started building something, if not launched, at least a prototype. So good luck. There's a site called Founder Dating. I don't know if you have any experience with that, but a couple of friends are involved in that, and you might check that out as well. So hope that helps you out. So I'd like to take a minute now to thank our sponsors. So relax,
Sure.
have a drink, do whatever you need to do. So this show would not be possible without the amazing support we receive from our two sponsors, Ustream and Orrick. Let's start with Ustream. We've been working with them since we started the show, and initially reached out to their CEO, Brad Hunstable, and then ultimately ended up working with a number of the people on the team there, especially Alden and Warren, and just had great support throughout. Especially, we took the show on the road this summer and over to Europe, and making sure that we were able to remotely broadcast from London and Paris. That was a little bit of a challenge, and they definitely helped us through those issues as well. So, if you're thinking about streaming, a meeting or doing some sort of live webcast or whatever it might be, you definitely want to check out Ustream. You can go to their website and learn more. It's ustream.tv. I'd also like to thank Mitch Zuklie and the team over at Orrick. Mitch and I have known each other for a long time and have worked together on multiple companies. I always tell founders who I'm meeting and working with, your lawyer is one of your most important advisors. Not only do they take care of the blocking and tackling on the legal side, but also just in terms of advice on things like acquisitions or hiring or whatever it might be. They've seen so many more of these situations than you might have seen, and can really help talk you through some of the pros and cons of whatever issue you might be facing. So make sure you find somebody good. Orrick is the best, and you can go find out more. They're at orrick.com, and hopefully they'll help you out as well as they've helped me out over the years. So with that, we're going to switch over to a segment we like to call Ask the Lawyer. And we're very fortunate to have Mitch Zuklie, who's the chairman and CEO of Orrick, with us every week. We like to cover one legal topic every week and see if we can help people out with something that they might see on the legal front. So today we're going to talk about acquisitions with Mitch. Mitch, are you with us?
Hey, Joe, great to talk with you.
Hey, great to have you again. And I thought today acquisitions would be a great topic. Most startups, if they have an exit at all, most likely that exit will end up being an acquisition of some sort versus going public. And a lot of times the founders haven't been through an acquisition before. If they're just out of school, or maybe have worked at Google for a while and then started a company. So, I think this is where a lawyer can be extremely valuable. And Mitch, maybe today you can start us off with some thoughts about, what are the critical things that a founder needs to understand about acquisitions?
You bet, Joe. And obviously, John's got a lot of experience with acquisitions, as do you, and there's a lot of business issues to wrestle through as well. But let me start with three legal issues that jump out at the forefront that I think people need to pay attention to. The first is, if you look at where people often get in disputes, most often it's around an earnout. Some deals are structured with the idea that there's an escrow. Almost all deals have a provision where a certain bucket of money called an escrow is set aside to make sure that reps and warranties are true and correct. But there's a separate type of a structure called an earnout, where additional consideration goes to the company if certain milestones are met after the deal. Far and away, the most substantial fights that you have in in merger context is about whether an earnout should have been earned or not. And the reason, of course, is once you sold your company, you're not always in control of it. And those earnouts often depend on business objectives being met. So that is just an area of stunning litigiousness. So avoiding earnouts, if you can, is a really good idea. Second issue, from a legal perspective, to really pay attention to is whether or not your liability is capped. That matters to founders. It certainly matters to investors and venture folks. And the usual is to say that the proceeds of the deal are your proceeds, except in the case of fraud, and except to the extent that there's an escrow out there. But sometimes that's not the case. And in fact, you can be exposed, sometimes in an unlimited fashion, if a rep goes wrong. It's critically important that not happen. It would be really hard for a venture fund to distribute proceeds if that was set up to its limiteds, if that was set up improperly. And it's very hard for a founder to feel comfortable knowing that whatever money they've earned through that deal is one that they can spend unless that's done properly. The third issue that I'd pay great attention to is the retention package of your team. John, you were just talking about how important recruiting is to an evaluation from John's perspective of how good a leader somebody is. And obviously, entrepreneurs work incredibly hard to assemble a good team. The retention of that team is another really critical point, and how that's treated, what percent of the total acquisition goes to that, how long the duration of how long people have to stay in order to get that retention package is I think the third most thorny of the legal issues. And then there's an awful lot of complicated tax issues around that too you got to pay attention to. But those are the big three, and we could spend a long time talking about each of those issues individually. But at a high level, those are the three biggest legal issues. And if you guys have time, I'd love to hear your perspective. You guys have done a lot of acquisitions, and I'd love to hear your view on it as well.
Yeah. So John, what do you think? What have you seen both in the companies you've been involved with, as well as some of the investments?
Yeah, well, I think those are good issues to bring up, and I think that one thing, I guess, the older I get and the longer I do this, the more I think about what I call alignment.
Yep.
And the more I think about how do we structure things so they're both going at the same goal in the same way. And I think that what Mitch is talking about on structuring earnouts and retention packages are sort of the flip side of earnouts, which is sort of forward-looking package, ways to keep people and make sure you get value out of the acquisition over time. And I would say that what you're really trying to do is acquisitions happen because a large company and a small company want to work together for some period of time to get to some outcome. And so I think that just thinking about alignment is the big thing. So I think that it's easy to say, well, those guys are on that side of the table and we're on this side of the table and we're going to take as much as we can off the table. But what you're really trying to figure out is how on day 0 and how on day 30 and how on day 365 do we set it up so that we're all feeling like we're running at the same thing and we're all feeling like we're doing the same thing and not feeling like we're fighting. Yeah. And so I think that's why you have earnouts at some level, because the larger company's trying to force alignment by you caring about some sort of business metric. And so I think that a lot of times what it's all about is just trying to remember that there are certainly financial and legal aspects to cover, but more philosophically, you're trying to figure out how to work together over the long term. And you're kind of doing all this deal stuff, but once the deal closes, you're on the team. Yep. And you can either be fired up and aligned with your new company, or you can be out to make sure you extract the maximum payments and totals. And I think it's always probably worth, just for both sides generally, to take a deep breath, remember why you're doing it, and try to think about it over the long term and the medium term as opposed to just the transaction date.
Yeah, and sometimes that's hard, right? Because
it's always hard.
Yeah, you're running out of money, and you're trying to get a return for your investors or whatever it might be. But I think those the situations where the acquisition works out is when they've spent a ton of time working through those issues, and yes, there are legal mechanisms to kind of enforce that or help to enforce it. But
the other thing I'd say is that life is long, and I think people are losing sight of this a little bit. So I've worked with you in probably half a dozen different contexts over the last 20 years. I worked with Mitch in a bunch of different contexts. I was at a board meeting for the first time where it was the first time I'd gone to this board meeting, but every person in the room I had known or worked with over the past 20 years. And so I think that people get a little worked up about being in this particular thing, this particular transaction or that particular deal. And I think that it's worth remembering, like, we're all in this over a long period of time, and things will come back.
Yep.
And so if you work hard and get out of alignment or get yours right now, people will remember that it'll come back around sooner or later. So, I mean, life is long.
Absolutely. So, Mitch, any closing thoughts you'd like to add?
No, other than to say, I think that's totally sage advice, and it's absolutely right that one transaction does not make a career, and one deal or one financing certainly doesn't either. And taking a long-term view, as you and John just advocated, is exactly right.
Although if you can get the right one, maybe it does make a career. So keep looking.
Absolutely. Well, thanks, Mitch. It's great to have you with us again, and we'll talk to you again next week.
All right. See you guys. Have a good rest of the show.
Thanks, Mitch.
Thanks, Mitch. That is Mitch Zuklie from Orrick, who had some great advice for us. Once again, if you want to reach us with a question, you can call us 1-844-4FOUNDER. You can email help@founderline.com, or you can tweet to @founderline. You know, we could spend the entire show just in 3 shows probably talking about those issues.
Yeah.
The other
Nothing's
thing,
more fun than legal advice.
Yeah, absolutely. Well,
Yeah.
I meant more the acquisition side of things.
I'm just teasing.
You know, the thing that stands out for me is I think one of the mistakes I've made over the years and seen others make is not really expecting that good will triumph, and not necessarily getting every last detail down in writing. And if it's not down in writing, it's probably not happening. So you want to trust, and you want to go into it eyes wide open and hope that all's going to work out, but sometimes it doesn't.
I think that's right. I think it depends on the actor, but I think that's right.
Absolutely. All right. Well, let's get back to some questions. We have a tweet here from Support Women Startups. So, and it's kind of in shorthand. It's advice you have for women startups, not venture capital savvy, but have divergent, potentially high growth business models. So,
the advice I have for women startups is the advice I have for all startups, which is make things people give a damn about, and be relentless about it. I've been lucky to work with some amazing women entrepreneurs in my career. Mariah Finley, who runs Citrus Lane, we just sold that company to Care.com last week before. Jennifer Palka, Mitchell Baker, who runs Mozilla, or who started Mozilla. It's the same as it always is, which is just startups are hard, and so you got to make things that people care about, and you got to have a big vision, and just keep going. And I'm not sure exactly how to answer that question other than be good at what you do.
Yep. And well, I think her point was they haven't maybe raised venture capital before, but I think especially now there's a lot of visibility in the topic of women in Silicon Valley and sexism and all this other stuff. And I think most VCs right now are particularly sensitive and identifying ways that they can be more helpful to women founders in general. I've at least in my career, I found most investors and startup people to be completely color, sex, blind to any issue around that. I'm sure that's not the case for a lot of people, and it's not to say that issues don't come up over time, whether it's sexual harassment or discrimination or otherwise. But I don't know. What have you seen?
I think that's the conventional wisdom, which is look, very few people are really bad actors. There are some that are legitimately bad actors, but most of us aren't doing anything wrong, and I think that's probably not enough. So I'd say that we talked about getting warm intros, for example, and the truth is that there are more men as part of networks and get to warm intros than there are women. So there's, Mitch Kapor, who founded my first company, and his wife Frida Kapor-Klein, they do a lot of work on what they call implicit or hidden bias. And what that is just the system's not neutral. The system's clearly unweighted for men and against women, and for for Caucasians against other races because of the way the networks have been built. And so I think, I think we have a lot of work to do, I think is all I can say. I think we haven't done well enough. I haven't done well enough. I do the best that I can. I think that there's more work that we need to do to highlight successes of women. Megan Smith at Google has been doing a really good job lately about highlighting the women-led breakthroughs in computer science and technology breakthroughs and women entrepreneurs lately. We need to do more of that. I think that it's been good and healthy for, there's this sort of self-disclosure thing that's happening where VMware and Facebook and Google is started to share, at least share the data about employees. That's a good start, but it's not enough. So, I don't have any good answers, but I would say that just not doing harm is probably not the standard we should be holding ourselves to.
Awesome. Well, I hope that's helpful. Let's go to Jay, who has an email. Lots of startups are in continuous fundraising mode where they'll do multiple convertible notes in a short span of time. We're seeing this, over the course of a year, they might do 3 or more convertible notes at different price points. So what's your position on this? Does it hurt our chances of raising a real A or B round?
I don't think it hurts. It's not probably helpful to spend a lot of time talking to investors. I think that it's often a distracting thing, and you start to think that discussions with investors are the core part of the work as opposed to building products people care about.
Yep.
I do think that mostly for A's and B's now, what you're really looking for is teams that have built products that seem to be working in the market, whether their enterprises are buying them, whether consumers are adopting them. And I think that the best investors will look and say, on the facts, this is working or this isn't working.
Yeah.
And then not worry too much about how the company got capitalized over the previous 12 months. There are certain concerns about ownership and making sure the management team has enough and that the investor can own enough coming in, but I don't think it is positive or negative. Just like people sometimes ask me about whether going through an incubator is positive or negative, and what I answer is I don't really care.
Depends, right?
It just kind of depends on what you've built and whether it's any good or not, and whether we can help.
I found that sometimes it can be a distraction, as you said.
For sure.
And they end up just chasing, more money. And I've been in that chair where the money's dwindling down, and you're like, look, if we don't get more money in 3 months, we're dead.
For sure.
What I've found is, especially if money comes chasing you, that if it's 6 months later and you have to do a new note, at a slightly different price, take the money. If it's a good investor, obviously. Right. But don't spend all your time. If you spend all your time, chasing money instead of recruiting and building product and the things you really need to be doing as a founder, you're probably going to end up failing anyway. So
I would say complexity too is the enemy generally. So I think simplicity is always to be strived for, and so I think sometimes you're trying to optimize to the last penny or pricing on a round. You say, well, this guy got it 2 weeks ago, so the price should be like 7% higher now.
Yeah.
And in general, that just adds complexity and in a way that's probably not additive to the company overall.
Yep. Totally agree. All right, so let's see. We have another one, an email from Pascal. How did a company like Instagram outperform a company like Color when Color had all the money and top talent like DJ Patil? So that's a little bit of a loaded question, but
well, DJ is a good friend of mine. They also had talent like Peter Pham, who runs Science now in LA, and Bill Wynn, who had done many startups.
Yeah.
Money's not the thing mostly. Like building a product that people care about is often just not correlated with money. What can I tell you? Like sometimes money's a distraction. Sometimes it means you build out. I think being focused and having constraints is a pretty good thing. So, Instagram, they were wandering around for a little while for the app called Bourbon.
That's right. That was their first product, right?
Yeah, which
social network.
Nobody really much wanted this like social network for sharing stuff and with people, and it was pretty vague. But then when they noticed that people were sharing pictures. And so Kevin and Mikey said, well, maybe we should just do that. Maybe we should listen to our users. So that's what Instagram came from. And then they really worked hard to reduce all the areas of friction around the axis they cared about, which is how fast can people share things and get them out to their networks. And so they were just really maniacal. They were, working from some constraint.
Do you know what their cash situation was when they made that decision? I don't think they had raised a lot of money at that point.
I think they hadn't raised a lot. So that was before they raised from Matt at Benchmark, but after they raised from Steve Anderson at Baseline.
Okay.
And so they probably had $1 million or something. I don't know exactly. Color raised, I think their raise was $41 million from Sequoia and others. And the truth is,
before they had anything. Right?
Before they had anything, yeah. But the questioner is exactly right. Like DJ is a profoundly talented guy. Bill and Peter are talented. Sometimes all-star teams work, sometimes they don't. Sometimes big bang launches work, sometimes they don't. If it were me launching a product now, I wouldn't announce a big funding. I wouldn't announce a big product launch. I would just go out and build products that people care about, and then let the product speak for itself. Let distribution take care of itself.
Yeah, great advice. I think sometimes too much money can really cause all sorts of issues, right?
Yeah.
You're worrying about what kind of finishes should we get on the desks, and
That's
you know,
right.
it's like desks don't matter. Like the product matters.
It is worth mentioning though that Color's vision wasn't wrong. So with Snapchat stories are very close to Color's vision now.
Amazing, isn't it?
And it just wasn't the right time. It was a little too early. They're trying to do a few too many things all at once. The interface was a little too minimal. Things have a way of coming back around. But their idea wasn't wrong.
Yep. And they're all good guys. So it reminds me a little bit of the Yankees, like that, like very high priced thing, but they don't win the World Series every year, right? So sometimes small ball works. So let's see.
But DJ is VP of product at Relate IQ, which just got sold to Salesforce for a sky high price. So.
Yeah.
So he did fine.
All right, you're just covering your ass with him to make sure he's not pissed off at you. All right, so let's see. Here's an email from Steven. When Greylock makes an investment, does the decision have to be unanimous? What if one or more partners disagree?
Oh, so we
You talked about when you did Tumblr, right? You didn't even. The rest of the partnership didn't even know. So
well, they knew. We worked it through. It's not like I wrote a check and like, oh my God, I don't want to tell my partners. But so our data shows. We don't vote. The way we work is we have a sponsoring partner who comes in and advocates for an investment, and we talk about it and we kind of figure out what makes sense. We get a little nervous when there's too much consensus. Historically, if everybody hates it or everybody loves it, that said, the data has played out for us that it wasn't our best investments. Our best investments have been ones that have been fairly contentious. Like, not everybody loved Instagram when we did that investment. Airbnb is a great example of a company that Reed invested in, which not everybody loved the idea of renting your couch out to some guy.
Yeah.
Seems a little crazy, or it did when they made the investment.
Yeah.
And Reed had conviction, and he believed in it, and he made the case, and he won the day. And one of the best examples of all time though is Facebook, and David Z invested in Facebook, I think in 2005 or 2006, so very early, at a valuation that was insane. It was something like $400 or $500 million at the time. I think most everybody in Silicon Valley thought he had absolutely lost his mind.
Yeah, and that was That was a large amount of money back then, right?
And it was not very long. Yeah, back when $500 million was a lot of money.
Yeah.
Right. Not like today.
Yeah.
But that was not very long after Jim Breyer had done it at about $100 million. And so people thought David had lost his mind, and there was internal discussion about whether it was a good idea or not. What we believe is that the partners of the firm develop internal conviction and partnership with entrepreneurs, and what Reed is fond of saying, what you want to be is contrarian and right. Contrarian and wrong sucks.
Yeah.
But if you're not contrarian, it doesn't matter, because if you think what everybody else thinks, there's no opportunity to make money or change the world. So contrarian and right is what you want. And so we don't look for unanimity in the partnership ever, really.
Sounds good. Stephen, hopefully that answers your question.
And in fact, there was a Newsweek piece about an investment we did recently called Sprig. It's push a button and get your food delivered in 10 minutes or something. And it's a guy named Gagan Biani, who's the CEO. And it was a funny experience because he came in and pitched, and during his pitch, our two most senior partners, Neil Boustry, who's the CEO of Workday, and David Z, who's done a lot of consumer investing, they started arguing about the merits of what Goggin was saying while Goggin was running his pitch. And this was David and Neil kind of going back and forth. And there's a Newsweek cover story about us and about that experience. But it's very typical. We argue all the time.
Yep.
And that's where the interesting edges are the places you're arguing about, not where you're agreeing.
Well, the best thing when you're a CEO, and I've been in that situation where like a couple of partners are going back and forth, is you just let them go, and it's really awesome when like they basically take your side and make the case for you, and they're repeating things that maybe they haven't even heard from you yet, and it's
a way worse case when nobody's saying anything.
Yeah,
it's way better when people are arguing about what you're saying.
I actually had a situation once where I knew something to be true, and one of the investors was arguing the opposite.
Yeah.
And I had a choice to make right there of how hard do I push on this? And luckily, the firm did some investigating, and it turned out she was completely wrong, and ended up being that was the deciding factor in making the investment or not. So
my 2 cents, or you should hold your ground on things that you know are true. I mean, things are matters of opinion. I think you should try hard to listen and try hard to understand points of view, because a lot of people who are around the table in these things have been around for a long time. But if something you know is true and they're not listening to you, then you kind of don't want to be their partners anyway.
Yeah,
so.
Absolutely. Absolutely. All right, so let's see. We've got time for a few more here. This email is from Alex. After a startup like Tumblr or Instagram is acquired, do you still stay involved and help the founders? Great question.
Yeah, it kind of depends. Those two companies don't need a hell of a lot of help. Like, they're both off to the races.
Yeah.
I talked to, in the months after the Tumblr acquisition, I talked to David a few times,
just to check in and see how it's going.
Yeah, and he was recruiting for various roles, and we talked about some people for those roles. Kevin got acquired by by Facebook, and he was kind of sucked into the board for a little while, and I see Kevin every quarter or two now. We work together on other projects, but neither one of those guys needs a lot of help.
Yep. So it sounds like you kind of fade out after the acquisition's made.
Yeah, but both, I find ways to work with both of them, and that's the plan.
Yeah, makes sense. All right, let's see. Here's one from Antonio. I'm a successful entrepreneur interested in moving to the VC side. What's the best way to do this? Well, there's probably not only one way to do it, but maybe share your story of how it happened, or other thoughts on how that comes about. Yeah,
so I'd say a few things. I would say that venture is a super idiosyncratic industry. So, and maybe calling it industry is a little too kind. It's a weird, conglomeration of things. I tried to do VC my first time in 2005, and I kind of underestimated how important fit was. And I looked around to try to find a good fit for a firm, and I couldn't really find one, and thank God, because that's what led me to join Mozilla when it was 12 people, where I would eventually become the CEO and grow it to about nearly 500 million users. And so that was the luckiest failure. Well, I've had a bunch of failures in my life. They're all, that was a pretty lucky one, because it really led to good professional growth for me and a really good opportunity. This last time around, it took me probably a year to really find the right place. I had a very small aperture. Like, that's one of the things, is like you should go in with knowing what your criteria are, knowing the people in the firm. And with Greylock, I've known Reed and worked with Reed for 10 or 15 years now on a variety of things, including Mozilla. I'd known and respected Anil and David and James. And even then, it took us the better part of a year to figure out whether there's a fit or not. So I think one thing is be very, very patient. One is that get to know people and kind of understand that most firms aren't really recruiting partners. It's a little bit like a dentist's office. Like you've got 4 or 5 dentists, and they're not running around all day saying, "Man, if we only had one more dentist in the office, that'd be great."
Right.
And so you really have to find a place to fit, and timing, and there's a whole bunch of things that have to come together. So being a little bit patient, but being focused on the relationships and the people and building value on both sides. There's not a real answer, one size fits all answer for this. It's as you know, it's just a quirky process.
Yep. Well, Antonio, hopefully that's helpful and gives you some ideas there. We have an email from Victor. Why are VCs so bad at responding to startups, even after they say they will?
Yes.
So, this comes up a lot. Like I reached out and I never heard back. Maybe it goes back to the warm intro, piece from earlier. But
yeah, I don't think he's probably talking about the people who don't ever respond to your first email. I think he's responding to, or he's reacting to people who take meetings and then say, okay, we'll get back to you by Tuesday, and then don't.
Okay.
And that's a pet peeve of mine too. I think that most investors are not very good at this. I will say that it probably took me 10 months before I had to write my confessional blog post about why I was so terrible at it one week.
You wrote something about this?
I think everyone does.
Oh, okay.
Because I think
it's like a rite of passage for VCs.
Right. So I think
Here's why I suck at getting back to people.
Well, and I try really hard to be as good as I can. I think that and I take it really seriously, and I'm hard on myself when I don't, and then I'll wake up in the middle of the night and say, oh my God, I didn't send mail back to Steve or Jim or whatever, and then I'll get up and I'll go do it, and that's why sometimes entrepreneurs get notes from me at weird times of night. But it's not perfect, and I think what I underappreciated is that when you're an investor and you get involved in 3 or 4 or 5 or 6 companies, what that means is that every company kind of goes at different cycles and different paces. And if one company goes through a financing or an acquisition or a crisis, then you can really focus on that. If 2 of your companies does that, okay, well you can focus on those 2. If like 3 of your companies all go through a crisis the same week and you're trying to maintain all the meetings you're seeing, well, you go into a hole.
Yeah.
And suddenly you're in meetings with new pitch meetings, 10 hours, and then you need to be on the phone with the CEO working on acquisition for a couple hours, and by the time you get through all that stuff, it's midnight, and you've got your mailbox, and you just can't find time. So sometimes you go into a hole, and so I think a lot of it has to do with timing. A lot of it has to do with deliberateness. I'm late on at least 3 responses right now. And I could list them off, and
he's going to get back to you later today, so don't worry. It's going to bug him. It's going to wake him up in the middle of the night.
It does bother me, but I feel bad about it. But I think that's what happens is you just get because of the nature of the job, you've got a bunch of different types of commitments all at the same time, and sometimes they just collide.
Yep, makes sense. All right, we've got about 60 seconds left. We'll squeeze in one more from Gideon. When did you know that Instagram was going to be huge, and what was the return on investment? So you can disclose as much or as little about that as you'd like, but
I don't know. I try not to think. I try to do the best I can and say, look, this is going to be an interesting, fun thing. For me, I saw Instagram and it was a compelling thing for lots and lots of people. So I thought it had a chance to be great.
When did you know, though? Like when? Well, I guess it was like a week later. So.
Well, I think Instagram is way bigger now than it was then. I think it could have been bigger now than the acquisition, but it was hard to tell that at the time. So. I don't know. I don't have a good answer for that. Return on investment, we did fine. Like we put a little bit of money on a Thursday. We got a lot. I got a lot out on a Sunday. So
the
problem.
IRR was very high, I would guess. I don't know the numbers, but I'm guessing.
But I honestly wanted to work with Kevin, so it was disappointing on that vector. But cry myself to the bank, I guess.
Yeah. Awesome. Well, I'm sorry we're out of time. Thanks for being such a great guest. You can follow John on Twitter. His handle is John O. Lilly, and I'll let you figure that one out. Why the O? Is that your middle name or?
Osborne. Yeah.
I always wondered if it was like some Irish thing or what was going on.
Middle
All right.
name.
So tune in next week for another episode of FounderLine. Our guest will be Jeff Clavier, who's the founder and managing partner of SoftTech VC, one of the more established seed VC firms in the Valley. They've done over 150 investments in startups since 2004 when Jeff started the firm. It'll be a great show. That's next Thursday at 5 p.m. Pacific time. Thank you once again to our fantastic sponsors, Orrick and Ustream. Don't forget to follow us on Twitter. Our handle is @FounderLine. You can email questions for Jeff in advance to help@founderline.com. You can also go to our website and subscribe to updates, see more about upcoming guests, and even subscribe to our podcast on iTunes. Thanks for watching, everybody. Here's to the crazy ones, and we'll see you again next week.